Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way.
Sounds good.
So I want you to imagine something for a second. Imagine spending, I don't know, billions of dollars to build the world's most luxurious international airport.
Right, like the really high-end ones.
Exactly. We've got the imported marble floors, the massive duty-free shopping hubs, these crazy logistics networks designed to move millions of people every single year.
It's a massive undertaking.
It is.
Yeah.
And then out of nowhere, you have to completely ground all your flights. You have to just freeze your entire economy.
All because of a drone?
Yes. Because a cheap, maybe $2,000 drone is suddenly targeting your fuel tanks. I mean, it's wild.
It really is. And, that is the exact reality forcing this massive, completely under-the-radar economic shift right now.
Yeah, and that's exactly what we are exploring in today's deep dive.
Hmm.
We're looking at how the Middle East is fundamentally rewiring the way it handles its money, its security, and, well, its international relationships.
Because the ripple effects of what is happening in the Gulf region right now, they're just profound.
Oh, totally.
We're looking at shifts that will, frankly, dictate the trajectory of the everyday American investor's retirement account. It's going to hit the global tech sector, international supply chains, for the next decade at least.
So to really understand the magnitude of this shift, we kind of have to look at the old assumption, right? The one that drove the global economy for decades.
The security umbrella.
Exactly. For a very long time, Gulf nations, places like Saudi Arabia and the United Arab Emirates, they operated under this very specific belief. They believed the United States security umbrella would just keep them perfectly safe.
They essentially thought, we can just focus on building glitzy skyscrapers in Dubai.
Right. Massive tourist resorts, global financial centers, and they figured America would just handle the defense.
Yeah, they focused on the economy, and the U.S. focused on the perimeter.
But the geopolitical assessments we are reviewing today, they show that era is definitively over.
Oh, absolutely. Looking at the data, that assumption hasn't just been challenged, it has been completely shattered.
Shattered is a good word for it.
Yeah, because since late February, the numbers indicate there have been over 2,000 missile and drone attacks in the region.
2,000. Since February.
Since late February, yeah. Think about that volume. That is not just some occasional skirmish out in the middle of nowhere. That is a relentless daily barrage.
Wow.
And like you said earlier, it is not just happening in remote desert areas. It has directly hit their critical economic engines.
Right. We actually saw flights get paused at Dubai International Airport.
Exactly. The conflict reached the UAE's Fujairah oil hub. And core energy infrastructure in Saudi Arabia, places like Ras Tanura and Abqaiq, they've been directly exposed to the threat of these strikes.
I mean, over 2,000 attacks in just a few months. That fundamentally changes the reality on the ground. You just cannot operate a global financial hub if your airspace isn't secure.
You really can't. And the economic shockwaves, they're highly visible in the commodity markets right now.
The oil supply took a huge hit, right?
Massive. Global oil supply took a hit of about 7 to 8 million barrels a day at the peak of those disruptions.
That is a staggering amount of oil to just go offline.
Yeah, Saudi Arabia actually had to cut its production by roughly 20%. It brought them down to 8 million barrels.
Wow.
And major international players, companies like Total Energies, they reported a 15% drop in their production due to these localized disruptions.
So this isn't just some, theoretical geopolitical debate happening in embassies somewhere.
No, not at all.
It is a physical disruption of global commodities that affects the price of literally everything you buy. Okay, let's unpack this a bit. Let's dig into the psychology of this shift. Because how a nation reacts to sudden vulnerability, that kind of dictates where their money moves next.
That's a great point.
Think about it like paying top dollar for a premium home security system. You pay this steep monthly fee for decades, you put the little sign in your front yard, and you feel completely untouchable.
Oh, you think you're perfectly safe.
Exactly. And then, one night, there's a break-in. And the alarms don't even go off. The security company is technically on the payroll, but your house still gets completely trashed.
That's a rude awakening.
But I have to push back on a key point here, looking at the analysis. Because if I'm that homeowner, I am absolutely furious at the security company, in this case Washington, right, for failing to uphold their end of the bargain.
You'd think so, yeah.
But the reports seem to indicate Their anger is pointing somewhere else entirely.
Yeah, what's fascinating here is that it's a completely logical assumption to think they'd be entirely focused on Washington's shortcomings, but the reality is much more nuanced.
How so?
Well, they are definitely demanding a renegotiation of their security posture with the U.S., but their absolute fury, their real anger, is directed at Tehran,
Really?
not the U.S.
Right. The feeling toward Iran is one of deep, fundamental betrayal.
Betrayal, that's a strong word.
It is. What stood out in the sources was that Gulf states had engaged in really extensive diplomacy prior to these escalations.
Oh, so they had actually talked about this beforehand.
Exactly. They specifically promised Iran that their territories and their bases would not be used by anyone to launch attacks against Iranian soil.
Oh, I see. So they proactively tried to establish like a neutral zone. They basically said, hey, keep us out of this. Our soil is off limits to everyone.
Precisely. They really thought they had a firm diplomatic understanding.
Right.
So Iran's decision to still strike Gulf airports, commercial ports, hotels, and refining infrastructure, it's viewed as a massive betrayal of that good faith effort.
That makes total sense.
Yep.
The Gulf states feel like they're paying the heaviest economic and security price for a broader conflict that they deliberately tried to avoid. Exactly.
So how are the specific countries handling this realization? Because the Middle East is incredibly diverse in its geopolitical strategies, they can't all be reacting the exact same way.
No, they aren't. The reports highlight how different nations are reacting based on their own unique vulnerabilities.
Let's start with Saudi Arabia.
Sure. So Saudi Arabia is playing a highly calculated dual strategy.
Okay.
On one hand, they are issuing stern, explicit warnings to Iran to stop the attacks. They're signaling that if their vital energy infrastructure continues to be hit, they might just open their bases up for broader U.S. military use.
Oh, so they are using the U.S. presence as leverage.
Exactly. But simultaneously, they are keeping their diplomatic channels with Iran wide open.
Interesting.
Yeah, they are treating U.S. military deterrence as an absolute last resort. They much prefer a realistic, managed dialogue to avoid a full-scale direct conflict, because that would just devastate their economy.
Right. So Saudi Arabia is kind of playing the long game here, keeping the big stick behind their back, but making sure they stay at the negotiating table.
That's a great way to put it.
What about the UAE? Because their entire brand is international business, logistics, and tourism. I mean, they have a completely different economic engine to protect compared to just oil.
The UAE is fiercely defending that exact economic model. Their absolute priority is protecting their image as a safe, stable, global hub for finance and aviation.
Because if they lose that image, they lose everything.
Exactly. Senior UAE officials have stated it will be incredibly difficult to return to pre-war relations with Iran. They are adopting a much harder line against any entity that threatens their core economic engine.
They simply cannot afford the perception of instability.
No, they really can't.
Okay, and if we look at Qatar, they host the Al Udeid Air Base, which is, I think, one of the largest U.S. military installations in the region.
It is, yeah.
So if they're feeling this same vulnerability, how do they pivot without alienating their primary protector?
Qatar's approach is highly strategic. Despite their infrastructure facing these regional threats, Qatar maintains that their security cooperation with the U.S. is unquestioned.
Okay, so they aren't pushing the U.S. out.
Not at all. But, and this is the critical pivot, they want to upgrade it.
Upgrade it. How?
They are actively looking to make their security multilateral. They are bringing in European allies to share the burden and the physical presence.
Oh, wow.
It's not about abandoning the U.S. shield. It's about acknowledging that a single shield, no matter how large it is, it's always going to have blind spots.
So if Qatar is actively upgrading its U.S. base to include European allies, that fundamentally shifts how we view the whole U.S. monopoly in the region.
Absolutely.
They're diversifying. I mean, it sounds exactly like a standard asset allocation strategy.
It really does.
You realize you can't put your entire 401k into a single company's stock, no matter how much you trust that company, right?
Right. That's just basic investing.
You create a portfolio of diverse assets to mitigate your risk.
Yeah.
And here, they're creating a portfolio of security.
A portfolio-style security model is actually the perfect way to describe the data we are seeing. Yeah. They are pulling in a much wider network of international stakeholders. Recent analysis shows expanded security and technological ties with Europe, China, India, Turkey, and Pakistan.
Wait, but are we just talking about ink on paper here? Or are we actually seeing other countries' militaries stepping into the physical space that the U.S. used to dominate?
Oh, We are seeing physical, tangible changes in the region's defense architecture.
Really, like what?
Well, for example, French fighter jets are already taking a more visible, active role in patrolling UAE airspace.
No kidding.
Yeah, and British fighter jets are playing a more prominent role in defending Qatari airspace right now.
Wow.
It is a physical diversification of their defense strategy. They're literally bringing new flags into the regional security perimeter.
I want to make sure we contextualize this properly, especially when we talk about the U.S. role changing. And I want to add a quick note for you listening. Whenever we touch on political figures or current administrations, we aren't endorsing any specific foreign policy or taking partisan sides.
Right, of course.
We are simply mapping out the geopolitical data and actions exactly as they appear in the source analysis so we can understand the market impact.
That's the goal.
With that in mind, is this purely the Middle East pushing the U.S. away, or is the U.S. actively trying to change the terms of the deal too?
It is absolutely a mutual evolution. The U.S. is actively pushing for shared responsibility.
Okay, so it's coming from both sides.
Yes. Current geopolitical assessments show that President Trump's administration has consistently pressured a coalition of nations to step up.
Which nations?
Places like China, the UK, France, Japan, and South Korea. The administration wants them to participate militarily in protecting the Strait of Hormuz.
Because the Strait of Hormuz is the ultimate choke point.
Exactly.
A massive percentage of the world's oil flows through that narrow waterway, and historically, the U.S. Navy carried almost the exclusive burden of keeping those shipping lanes open.
Right. And the evolving U.S. stance under the current administration is essentially a demand for burden sharing. They're basically saying, look, if your economy relies on this oil, your military needs to help protect the ships.
That makes sense.
So the U.S. monopoly on regional security is weakening by design. It's through a mutual renegotiation.
Right.
The United States remains the absolute core pillar of Middle Eastern security, but it is intentionally no longer the only pillar.
Okay, so here's where it gets really interesting for the money side of things.
Yeah, let's look at the money.
If their entire security strategy is fundamentally changing from relying on one partner to managing this diverse portfolio of allies, their national budgets and capital expenditures, they have to radically shift as well.
They do.
Because you cannot fund a whole new defense paradigm without pulling capital from somewhere else. It's like the ultimate homeowner dilemma again.
How so?
Well, say you start a massive, flashy kitchen renovation. You've got the custom cabinets, the beautiful marble countertops.
Yep.
Right. But halfway through, you realize you live in a hurricane zone and your roof is leaking.
Oh, man.
You suddenly have to halt all those aesthetic upgrades because you desperately need to spend all that capital on a reinforced roof and storm shutters. You can't enjoy the luxury kitchen if the house just caves in.
That is precisely what is happening to their macroeconomic forecasting right now.
Really? The numbers show that.
Yes, the focus has forcibly shifted from luxury growth to sheer survival. According to recent analysis, JP Morgan has significantly lowered the non-oil growth forecasts for the entire Gulf region.
Wow.
And the UAE is taking the most substantial hit in those forecasts.
When we talk about non-oil growth taking a hit, we are talking about the exact sectors they spent the last 20 years building to survive a post-oil world, right?
Exactly.
The tourism hubs, the international real estate markets, the tech incubator.
Yes, those diversification engines are stalling because the new absolute priority across the board is what they call national resilience.
National resilience.
Yeah.
That sounds expensive.
It is. It requires a staggering shift in capital allocation. You have to remember, Gulf sovereign wealth funds manage trillions of dollars.
Trillions. With a T.
Yes. And historically, they have been massively aggressive outward investors. They were buying prime real estate in London, funding tech startups in Silicon Valley, acquiring major sports franchises.
Right, you saw their money everywhere.
But now they are pivoting. They're focusing intensely on their own domestic vital infrastructure.
Let's define vital infrastructure in this specific context. Because usually when I hear that, it means highways and bridges.
Right.
But if growth infrastructure has become synonymous with security infrastructure, what are they actually building?
They are building hardcore defensive ecosystems. We are talking about massive, accelerated investments in layered air defense systems, advanced anti-drone technology, and state-of-the-art cybersecurity networks.
Wow.
But the mechanisms go much deeper than just buying missiles. It really means protecting the very systems that keep their societies habitable.
Right, because if a drone takes out a power grid in a literal desert climate, the cascading effects are catastrophic.
Exactly. Take water desalination plants, for example.
Oh, yeah.
These countries rely almost entirely on desalination for drinking water.
Yeah.
It is absolute life-critical infrastructure.
Right. They don't have lakes and rivers to fall back on.
No, they don't. If a targeted strike hits the power source for those plants, a major city could run out of water in a matter of days.
That is terrifying.
It is. So investing in resilience means pouring billions into protecting those specific plants. They're building massive redundancies into their power grid so a single strike can't cause a total blackout.
Makes sense.
And they are heavily reinforcing maritime security around their commercial logistics ports.
You know, it also completely changes the nature of their tech investments.
How so?
Well, building an AI data center isn't just about capturing the software market anymore, right? It requires building completely decentralized power grids so that if one sector is attacked, the financial data of the entire nation isn't just wiped out.
Right, exactly.
The hardware itself has to be militarized in its resilience.
That is exactly the mechanism at play. They are realizing that in the modern geopolitical climate, economic growth is entirely contingent on the ability to absorb and survive a kinetic shock.
So what does this all mean for you, whether you're mapping out your retirement accounts or you're just trying to understand broader market trends?
It changes a lot.
Usually the classic playbook is that when conflict spikes in the Middle East, the knee-jerk reaction is simply to, buy oil stocks.
That's the traditional move.
But based on the mechanisms we've just discussed, the drone threats, the shift in sovereign wealth spending, the vulnerability of things like desalination, that classic playbook seems incredibly short-sighted.
If we connect this to the bigger picture, it is entirely short-sighted. The sources give us a much more sophisticated framework for understanding the long-term market impacts here.
Okay, lay it out for us.
Well, if you are an investor watching these trends, you have to move beyond just the immediate price of a barrel of oil. You have to look at the structural changes happening underneath.
Let's break down how this actually impacts the market, starting with that oil assumption. Why is it a trap to just focus on the energy sector here?
Because the risk profile has fundamentally inverted.
What do you mean by inverted?
Historically, nations like Saudi Arabia benefited on paper when oil prices spiked due to regional tension.
Right, tension goes up, prices go up, they make more money.
Exactly. But the reality now is that their actual physical energy infrastructure is the primary target. You cannot profit from high oil prices if your refining capacity is completely offline due to a drone strike.
Oh, that's a great point. You can't sell what you can't refine.
Exactly. Furthermore, their non-oil sectors, the logistics, the tourism, the aviation networks that they've spent billions building, those are taking direct, tangible hits.
So if you are looking at, say, emerging market funds that heavily weight the Gulf region, you have to realize that the fundamental risk of those non-oil assets has changed.
Yes, significantly.
I mean, a luxury high-rise development in a financial hub looks a lot less attractive to foreign capital if there are active military patrols required in the airspace right above it.
It definitely cools the market.
So if that domestic growth is stalling, where is the actual opportunity for an investor?
The opportunity lies in what the data points to as the resilience boom.
The resilience boom.
Yes. The most promising investment theme coming out of the Middle East right now isn't the domestic real estate or local consumer markets.
It's not.
No, it is the companies that are building this new security infrastructure.
Ah, so it's the classic pick and shovel play.
Exactly.
You don't invest in the gold mine itself. You invest in the company that is selling the shovels to the miners.
That's a perfect analogy.
If the Gulf is spending billions to harden their infrastructure, they have to buy that highly specialized tech from somewhere.
Precisely. And the companies selling those shovels are largely established U.S. and European firms.
Okay, so we're looking closer to home.
Right. We are talking about major defense contractors, companies specializing in advanced maritime security, and firms that build industrial automation systems.
Okay.
But it goes way beyond just traditional defense. It heavily impacts the global tech infrastructure sector as well.
How does tech play into this?
Well, the companies building AI-driven power distribution networks or designing those localized redundant microgrids you mentioned earlier, those firms stand to benefit massively from an influx of huge long-term Gulf contracts.
Wow.
These nations are essentially outsourcing their national survival to Western engineering and tech firms.
That just totally flips the script. It's not about investing in the region's domestic growth at all. It's about investing in the global companies they are hiring to protect whatever growth they have left.
Exactly.
But this also requires a massive movement of capital, right? If
Yeah.
they're spending hundreds of billions on Western defense and grid redundancy, that money has to come from somewhere. It has
Uh-huh.
to come from their sovereign wealth funds.
Yes, it does.
So how does that shift in liquidity impact the broader markets?
This is the macroeconomic mechanism that every investor really needs to understand.
Right.
Gulf sovereign wealth funds are the whales of the global market. They provide a massive, vital source of liquidity for U.S. and European assets.
Right.
They hold enormous amounts of Western equities, bonds, and private equity. Now, the reports indicate they aren't going to suddenly panic and liquidate all their U.S.
They
holdings.
aren't just selling everything off.
No, they are maintaining their core long-term strategies.
But the nature of where they deploy their new capital, that is going to change.
Yes.
They are going to stop chasing the high-risk speculative investments.
Exactly. The era of a Gulf wealth fund blindly pouring billions into an unproven Silicon Valley software startup is likely cooling down.
Makes sense.
Their new capital allocations will be much more strategic, highly defensive, and focused on hard global infrastructure.
Hard assets.
Right. They're going to invest in global assets that mirror their new domestic priorities: energy security, logistics networks, and tangible hard assets.
So if you see certain global infrastructure or defense ETFs experiencing sustained long-term inflows, part of that underlying story might just be these massive sovereign wealth funds quietly reallocating their trillions.
It very well could be.
They are moving away from speculative growth and really just anchoring into the realities of a much more dangerous world.
It is a slow structural shift in global capital, and it will define market trends for years to come.
Wow. Okay, to sum up this deep dive for you, the Middle East is fundamentally renegotiating its place in the world right now.
Absolutely.
The old era of purely relying on an American security umbrella while focusing exclusively on flashy economic growth, that is dead.
It's over.
The new era is a complex, highly pragmatic mix. It is about maintaining U.S. ties while simultaneously building intense self-reliance through massive infrastructure spending.
Right.
It is about diversifying their partnerships to include Europe and Asia, and it's about keeping very cautious, realistic diplomatic back channels open with adversaries like Iran. It's basically a complete portfolio approach to national survival.
It is a profound structural transformation. And as we watch these trillions of dollars move around, it raises an important question that I think anyone tracking the markets should consider.
What's that?
Well, if the massive pools of global wealth in the Middle East definitively pivot away from funding peacetime speculative tech innovations and instead dedicate that massive liquidity to funding hardcore defense and infrastructure resilience,
Yeah.
how will this new security premium alter the overall pace of innovation and growth in the global tech sector over the next decade?
That is a fascinating dynamic to watch. The same global capital that fueled the last massive software and tech boom might be tied up building anti-drone shields and redundant power grids for the next 10 years. Don't forget to subscribe and hit that like button.